I guess we are live, right? Okay. Good morning, everyone. Um, it's 9:37 a.m. West African time. It's a beautiful morning out here. In fact, it's sunny. And depending on what time zone you are tuning in from, I wish you a good afternoon and good evening. I'm excited to welcome you all to our final trading day. And of course, during this Forex Morning Mastery session, we are going to be reviewing how well the asset we are monitoring since the beginning of the week has been doing. And of course, we are going to be looking at the fundamental factors, the technical details on the chart to understand how market participants are thinking so that we can have a precise trading decision ahead of today's session. So I'm very much excited to welcome you all. And for those of you who are joining us for the first time, as always, my own name is Sheriff Daramola. And for the next 40 to 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. The Forex Morning Mastery is not a signal service platform, but instead an avenue where we all come together to understand what the market is doing, and based on this understanding, we can make our own independent trading decisions. So we run the Forex Morning Mastery. All right, everyone. I'm so sorry for that break. I guess it was internet reception, is I don't know. I was talking and never knew that we are already offline, but thank goodness we are able to be back on. So, once again, I welcome you all as we delve into the final trading day. So, where were we before the break? We were about to talk about the major drivers or the dynamics that has been influencing the US dollar through the course of the week. And of course, we all know that it is important for us to have an insight into how market participants are thinking, especially around the US dollar, since the US dollar remains the major asset connected to all of the instruments we have been monitoring since the beginning of the week. Remember, we're monitoring the USOILSPOT, which is obviously a US dollar denominated asset. We've also been looking at the USDJPY, and of course the XAUUSD, a non-yielding asset, which is also strongly influenced by the US dollar. And of course, during the course of the week, we're beginning to notice that the dollar has been trying to gain some traction due to a couple of factors like a strong US data rolling in through the course of the week. We saw the US economy doing very strong this week after we saw one of the data we saw this week was the durable goods order that came in yesterday, and we saw this figure jumped to a 9.2% increase in March, which is tremendously higher than what market participants were anticipating. And of course, it was way higher than the previous month, which was pegged at 0.9%. Of course, this is a very, very solid growth, which could be bringing some positive insight into the US economy. And of course, it will be influencing the US dollar. So we saw the US dollar gain some traction as a result of this. And not only that, we saw the initial jobless claim, though still very low, but still somewhere around what market participants were expecting. However, this report means that people aren't losing jobs very fast. So it's still, let's say, manageable at this point in time. Then what else again did we see this week? Okay, we saw the S&P Global publication come in. The data is still above the 50 mark. We know what the index is all about. It's between the 0 to 100. Anything above 50 is considered to be an expansion in that sector, while anything below 50 is considered to be a contraction. And of course, we saw the manufacturing sector grew a little bit. There was an expectation of 49.4, but we saw the actual data come in at 50.7, a little bit higher than the previous month data, though the service sector dropped dropped to 51.4, lower than the expectation and of course lower than the previous month. But the fact here is that it's still considerably okay, considering the fact that it is above the $50 mark. So I still think that the dollar could build momentum on this. And of course, we saw the DXY do some traction in that regard. Let's see what is going on the DXY chart. We want to be seeing things on the higher time frame. So let's see. Okay, so this was the structure we talked about on the during our Monday live stream, where we identify a trend, a descending trend line showing that the price of the dollar has been dropping through the last month into this month, and then we noticed some recovery happen from last week, and of course we see that price appear to have broken out of that descending trend line to emphasize that buyers, the market is gradually recovering. And for the fact that price remains above the trend line in the last 48 to 60 hours could be a significant signal that we may see the price of the US dollar gain some momentum to the upside. Then Fed officials are sending mixed signal recently. If you look at the economic calendar, we had a bunch of economic Fed officials speak. We have Jefferson, Hacker, Kashkari, Barkin, and Kogler all spoke on Tuesday. Goldsby spoke on Monday. Then we have Musalem, we have Wallace, we have Amak. A lot of them spoke this week. And of course, market were looking at their narrative to have an insight into what is going to be coming up as regards to interest rate decision. And some Fed officials are saying that they might I want to use their word, they might cut rates soon if the economy slows. And others are like, we will wait and see. There is no rush at the moment. And this confusion has created a choppy market condition around the US dollar. As you will see, the last 48 to 60 hours have seen the dollar continue to play in a range bound structure just right above that descending trend line. And of course, the US-China trade talks appears to be improving risk sentiment as we saw hope of reduced tariffs and de-escalation in the US-China trade war, which has obviously boosted risk appetite and made the US dollar slightly stronger versus safe haven assets like the Japanese yen that we are monitoring. Of course, we are going to be looking at that market dynamic very soon. So if you're a fan of the USDJPY, you do want to stay around. But still, the momentum is still struggling at the moment. I don't think it's enough to push the US dollar into full breakout mode, but we will look at how the market is reacting in the structures we are going to be looking at across the asset we are monitoring. So we are going to be taking into account, we are going to be expecting some volatility. Of course, today is the last trading day of the week, and there is this psychological expectations that market participants will be rounding off their trading activities ahead of the weekend, and we could see some profit-taking activities which could see price move in the opposite direction of the prior leading price action. And of course, with mixed Fed views, end of the week position adjustment, traders might be very active today. So we will be looking at what they are thinking across the chart to see how we will be positioning ourselves for the next move. So if you're a fan of the USDJPY, the XAUUSD, and of course the USOILSPOT, stay tuned in, as you do not want to miss out on the valuable ideas we will be deliberating on today. So with that said here, let's dive right into the business. And of course, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And what is going on in this market? What has been our bias since the beginning of the week, and what positions have we been taking? Now, if you remember, at the beginning of the week, we did observe that the market started the week on a strong bearish note. We saw price started the week around the $62.70 level, and of course we saw this engulfing bearish candle pushing price into the $62.60 level, our first support line for the week before consolidation started happening. Though we had a buy, we got stopped out in a loss, but we were able to recoup the loss at the breakdown of the structure before this bullish momentum happened. So throughout Tuesday, I was not on my workstation, so we missed out on this bullish traction. And of course, we discussed this in detail during our live session on Wednesday, where I said that the major key determinant of price action during the midweek is going to be this descending trend line. And of course, you know how we use our descending trend lines. As long as price remains above them, we will maintain a bullish bias. And as a result of that, we were looking at adding more buy position if price breaks out and retests the $64.50 level. And we went on to say here that if at any point in time price breaks down that ascending trend line, we will be selling the USOILSPOT. And one thing I said here is that I will have my sell stop order below the $62.70 level. Remember, we placed the sell stop order here, and we said there is a room for us to sell even before the breakdown of that level happens. That is, the only condition that will make us do that is if we see price break down, retest the trend line where continuous selling pressure shows us that buyers have lost the momentum, then we can sell and add more sell position. But that never happened, obviously. So the only condition we were able to capitalize on Wednesday was the breakdown retest of the $62.70 level. And of course, we saw price move significantly well over 200 pips before that bullish momentum started again during the later part of the New York session on Wednesday. And for those of us who capitalized on this opportunity, well done and kudos to you. So right now, the market has been consolidating, as you can see, in the last 48 to 60 hours, showing us signs of indecisiveness as market participants weigh in the current market dynamic. So the question as we head into this last trading day is whether or not buyers and sellers have the potential to push price either to the upside or to the downside. But if we take a look at the fundamental factors, that is what is going on behind the scenes that has been driving the sentiment around this market, the path of least resistance remains to the downside. I'm talking about the OPEC plus supply surge expectations. I talked about this on Monday and Wednesday, where OPEC nations are pushing in for increased output in May and in June. And this, of course, could weigh heavily on supply-demand dynamics. You know, the more the commodities in the market, it becomes surplus. And, of course, the availability of the market makes that commodity very, very cheap. And one of this is one of the major factors, I think, is supporting the downtrend trajectory we are seeing at this point. Then the potential return of Iranian oil into the market is another factor here, where the Iran's foreign minister on Tuesday, was it on Tuesday or Wednesday, signaled openness to nuclear negotiation with Europe, and this is raising the odds of sanctions being lifted and Iranian exports returning to the global market, hereby increasing the supply in the market. Then the weak global demand outlook, where the prolonged US-China trade tensions is likely going to hurt global economic activity, higher cost, supply chain disruptions, and of course reduced financial forecasts also threaten to dampen oil demand, especially from the two largest consumers. I'm talking about the United States and the Chinese economy. So for me, all of these are very strong indications that the price of crude oil is likely going to continue to the downside. Now, if you look at the structure here on the 1 hour time frame following this impulsive bearish leg, it seems as if this old consolidation we saw here in the last 2.5 days is more like a retracement of that impulsive bearish leg to begin another wave of bearish momentum. Now, in as much as the path of least resistance remains to the downside, we cannot ignore the potential that the price of oil could rise. Now, despite the broader weakness I've talked about here, oil is staging a modest intraday rebound, especially if you look at the technical structure on the chart, and it's up for the second consecutive session. So what are we going to do here? Are there any chances that buyers can come in, maybe break out the $63 level to continue the uptrend move, or will price just maintain selling pressure, pushing price to the downside? So what are the things that we are going to be looking out for today, especially being the last trading day of the week? We are going to be monitoring development on OPEC plus output statements, especially from Saudi Arabia and Russia. We are going to be looking at US-Iran nuclear deal progress, any Russian-Ukraine ceasefire headlines, and of course, global resentiment tied to China and broader demand. Now, with that said here, let's look at how the market are thinking, or let's say digesting the current information. Now, for me to do this appropriately, I had to scale down to the 15 minutes time frame where I identified a simple trading setup that we are going to be using today. And of course, this has led to a sell position for me. If you look at the bottom of your screen right now, you will see that I have a sell position triggered. Can you see it? Let me check. So I think you can see it now, right? So I do have a sell position triggered. I think it's running with about 8 pips in profit right now. And this is the structure here that made me make that decision. Now, if you look at the chart, you will see that since Wednesday, after that strong bearish move we took, we saw that price had consistently found higher lows, giving us this beautiful ascending trend. In fact, we have a couple of them at this point. And of course, you know how we use our ascending trend lines. As long as price remains above them, we maintain bullish bias. But if price breaks below that ascending trend line, then we begin to shift momentum to the downside. And this was exactly what happened this morning. We saw price break down, retest the trend line multiple times, though I entered very late, but I think I was able to join, at least hoping that price will continue that downtrend scenario. So this is why I have sold the USOILSPOT, as you can see on your screen, and I look forward to adding more sell position if the market continues to the downside, especially after considering the sentiment, the fundamentals that support more of a bearish bias. Now, I would love to add one more sell position here. So let me do that quickly, and I will explain to you in a moment why I am doing so. So I want to place a sell stop order right around the $62.40 level. I just did that. So let's look at why I'm doing that. So if you look at this here, let's bring out our line chart. I'm beginning to notice some consolidation happen here. Okay, so I want to, so this level here is the $62.40 level, right? And the last 1 hour, we have noticed buy pressure here. And if we go back to as far as yesterday evening, we saw buy pressure resume from here. And the same thing goes on around here. And if this area becomes a platform for buyers, then this could shift momentum against the bearish sentiment we have. But if we see a situation where this level is broken to the downside, we could be seeing more opportunities to sell. So this is basically why I will be adding more sell positions below the $62.40 level. So let's see how the market is going to play out from here. I maintain a bearish bias considering the fact that both the ascending trend line and the $62.75 level were broken and retested multiple times to emphasize the strength of the sellers in this market. So that is what I'm looking at to sell the USOILSPOT. Now, in as much as we looking out for buying ideas, for selling ideas, we cannot ignore the potentials that buyers can come into play. And what are the conditions that we want to see on this chart that will make us change bias to bullish? Well, like I said, we have an ascending trend line here. So the only condition that will make me start considering buying is for price to climb back above this ascending trend line. And if I can see something like price doing this, multiple retests, that is sellers finding it difficult to break back down the ascending trend line, I'm willing to join an uptrend move. And of course, with a buy stop order above the $62.15 level, I will be adding more buy positions to our existing trade. But if you ask me from my own sentiments, I still strongly believe that the path of least resistance remains to the downside, thanks to OPEC supply, oversupply expectations, potential return of Iranian oil to the global market, possible rise in Russian supply into the market after potential easing geopolitical tension between Russia and the US, and of course weak global demand outlook, all of which support excess supply of crude oil, and this may push price to the downside. But if it does the opposite, we can never tell how the market will behave. We are on standby to capitalize on whatever opportunity the market presents to us. So there you have it, my in-depth look at the US oil spot for today's trading session. I do hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at this morning is the USDJPY. We revisited the USDJPY at the beginning of the week. We have been monitoring the JPY/USD inset, but due to popular demand, we've been monitoring the JPY/USD in the last 2 months thereabout. But due to popular demand on Monday, we had to revisit the USDJPY. And of course, we've not done bad at all on this asset. We had the privilege of joining both sell and bullish opportunities during the course of the week, making us some significant profit in this particular market. And for those of us who are part of the Forex market prep on Sunday, we had the privilege of scoping over 200 pips, joining that bearish move right from the 142.00 level. So for those of us who are part of that session, we had a swing trading approach in that regard. We joined that move from that 142 and we rode it all the way down before that bullish momentum began again. So for those of us who are part of that session, well done, kudos to you. Then on Monday for the Forex market, for the Forex Morning Mastery, we had a small sell position at this point after buying. I think that buy went into break even. Then we sold again around the structure. And during our live session on Wednesday, we had a new trading setup on the 15 minutes time frame. So let me pull that out quickly. So I think I still have it here. So this is it on the 15 minutes time frame. So this is what we were looking at on Wednesday's trading session. We had a very simple trading setup here. We had a consolidation that lasted about 6 hours, I think, throughout the Asian session, which emphasized the indecision going on in the market prior to our live stream on Wednesday. And following the very good data from the from the United States. Remember, I told you about a modestly strong US dollar and improving risk sentiment due to one, we have the optimism around the US-China trade de-escalation, which obviously was dampening the safe haven demand for yen. Then we also have strong US data, which also gave some promising strength to the US dollar. So we saw the durable goods order coming a little bit higher. I said a little bit, no, way higher than market had expected. We also saw the S&P Global publication also showed figures above the 50 mark. And of course, we had speeches from Fed officials hinting at potential rate cuts, possibly as early as June, and this may likely weaken the US dollar. That is a very theoretical expectation, but not enough yet to tilt the USD/JPY trend. Instead, it may fuel some volatility. Now, the data from the US economy suggests at this point, at least, a resilient U.S. economy helping keeping the USD/JPY elevated. And of course, we saw the buy position got triggered, had the break of the 142, and we saw how price moved all the way into the 143.5 area, dovetailing to over 160 pips before that bearish momentum began. I do hope you moved your stop losses accordingly. If you had done so, you must have been taken out with a reasonable amount of profit. And for those of you who capitalized on these opportunities, well done and kudos to you. So yesterday, I didn't trade yesterday, so I was off the market, and the market showed some rise during yesterday's trading session, so I actually missed out on that one. We saw the retracement. By the time price retraced into around the 143.2, I had to leave the market, but yesterday we saw a resurgence in that momentum, bringing price around the 143.850. Now, going into today's trading session, I'm beginning to notice some indecision going on in the market right now, and of course, chances that sellers may come into play. Yesterday, we saw the Japan CPI data surprise. Let me show you right here. So yesterday, Thursday, April 24th, the CPI rose to 3.5% from the previous month, which was pegged at 2.9%. And of course, the core CPI is about 3.4%, as you can see here, way higher than the 2.4. And of course, this is the highest core CPI for the Japanese economy in 2 years. Now, this suggests a broadening inflation, giving the Bank of Japan more room to hike interest rate again. And market participants are now anticipating, or let me say accepting, the possibility of another Bank of Japan rate hike this year, marking a policy divergence from the Fed and potentially supporting the yen in a long term. So is this the time to start yearning for the yen again? And of course, to further support the strength of the yen at this juncture, we had the Japanese economic minister yesterday said that he is set for a second round of trade talks with the U.S. Treasury. A favorable deal could boost investors' confidence in the Japan economy and support the yen to the downside. So sorry, to the upside, which is going to be to the downside against the USDJPY. So how do we bring this information to the chart? How are market participants digesting this information? Now, as long as the Fed stays dovish, but US data remains strong, and Bank of Japan policy shifts is long-term, USDJPY may continue to grind higher. So we will consider buying ideas as well. But in the midterm, volatility is very, very likely. So we want to be very cautious during Fed speeches. Japanese economic releases. Let's see what is going on today on the economic calendar. So we really do not have much from the Japanese economy. We have the Michigan publication of the Consumer Expectations Index coming in today. It's not really an important event that could probably spike prices. So today is like flat for me, and I think market participant will be digesting the information I just explained earlier, and as a result we want to be looking at key levels to watch out for trading ideas. Personally, I already have a sell position running. I think it's running with about 6 pips. If you look at the bottom of your screen, you will see it's in a loss of about 10 pips, I think. Let's go into the chart and see what I'm talking about. So I identify a new structure on the 15 minutes time frame. So let's look at this together and see why I had decided to sell. So looking at this structure here, this was what I was able to come up with. So price of the US dollar had risen during the course of the week. It's in a 143.850, and we saw what happened during the Asian session. During the later part of the Asian session, we saw price confined within the 143.850 and the 148.500, a level which was at some point during the Wednesday trading session a resistant line, and it was serving as a support line here before it got broken and retested to the downside this morning, which for me is considered to be a bearish signal. You know how we treat our range bound structure. Of course, whenever we identify them like this, we wait for price to either break out the resistant line to give us buying opportunities, or break down the support line to give us selling opportunities. Now, with that breakdown happen here, I decided to sell at this point. And in fact, since I sold, the market hasn't really showed traction that sellers are getting stronger. So the market is looking as if it is still not buying into the strength of the Japanese economy at this point in time, and this may likely be to the fact that the US market is not yet open. So maybe when the New York session opens in about 3-4 hours from now, we may likely see some real traction in that regard. So we do, of course, want to be preparing ourselves for that volatile move when it finally happens. So like I said, I currently have a sell position running on the USDJPY, though it's in a minor loss at the moment. And of course, I want to be marking out this new consolidation phase you see here. So it's around the 143.260, I think, or let's say 143.250. I love using psychological levels. So 143.250 is looking like it at this point. So I would mark out the structure accordingly. And of course, it's a range bound, right? You can see price is confined within the 148.5 and the 143.250. And simple range bound structure for us is a sign that negotiation is going on. Now, who is going to win? We will only know if price break down or break out the structure. If a breakdown happens, that means sellers have won. If a breakout happens, that means buyers have won. So at this point, considering the resilience of the Japanese economy, I will place a sell stop order below the structure with the hopes of maximizing this current sell bearish buyers I have. So I just placed a sell stop order below the 143.250 to maximize the bearish move. And please note that as soon as price moves significantly in our favor, we want to be moving our stop losses accordingly, securing the position as anything could happen. Today is the last trading day of the week. Volatility is expected as market participants round off their trading activities ahead of the weekend. Now, there is a caveat to this bearish setup. Now, let's look at this. Let's zoom out of the structure. Now, as you can see, since when was that? Let's go to as far back as Tuesday's trading session. You can see the price of the USDJPY had consistently found higher highs and higher lows, and as a result of this, we have a beautiful ascending trend line after connecting the pivot lows, as you can see here. Now, one thing for sure is the market is in the midterm upward trending, and when price remains above the trend line, it is expected that we look out for buying ideas. But due to the fundamentals we just discussed, we are looking at a counter trend opportunity here. And when we take counter trend opportunities, we must be very, very careful, because anything could happen. Buyers could pick up at any point in time. So we want to ensure that we mark out structures that will be guiding our moves. US dollar is strong at the moment, modestly strong at least. US-China trade war is easing at the moment, and Fed policy shift towards easing interest rate is also, though not really likely at the moment. So we want to be very, very careful. So if we are selling this this USDJPY, please note that as soon as price gets close to the trend line, we want to move all our stop losses and secure the current sell position. Of course, we know the trend line here could become a platform that will incite the uptrend continuation. So we want to be very careful about this. As soon as price moves into the trend line, move your stop losses accordingly, secure the current sell position while we monitor price action around the structure. So if buy pressure resumes here, that is, buyers continues to push, sellers find it difficult to break down the trend line, it could inspire another wave of bullish momentum. But if price breaks down the trend line, then this could welcome more selling ideas, especially around the psychological level at the 143.00 area. So we mark out that structure there. It welcomes more selling ideas if price breaks down and retest that structure. So as you can see at the bottom of your screen, the USDJPY second sell position has finally triggered, and let's see how far this momentum is going to go. So that is what I'm looking at as regards to the current structure here. So please mark out that trend line. It's going to be playing a significant role for us. If price gets there, buy pressure resumes, let's say we see something like a double bottom structure here, we mark out the neckline and then join the uptrend move. But if price breaks down the structure, this could incite more selling opportunities. So that is what I'm looking at on the USDJPY. Now, if the sentiment begins to shift in favor of the US dollar, maybe as a result of the strong US data that we saw, and of course conflicting report from Fed officials, which makes investors positive about the dollar, we may see price rise. Now, if that is going to be the case, we get taken out of the sell position, and of course a breakout retest of the 148.500 could welcome buying ideas. But if you are a cautious trader, you are not willing to risk too much, then I would suggest that you wait for the breakout of the 143.850 before jumping into a buy. So for me, actually, I will see what happens around the 148.500. If I can see price breakout and then continue retest of the structure, I will join and then of course maximize at the breakout of the 148.850. So that is basically what I'm looking at on the USDJPY today. And remember, we need to be very cautious. Risk management is very, very key. every decision we make is more or less an educated guess until price action hits your TP target. So with this understanding, let's ensure that we have a well-defined risk management strategy in place. Move your stop losses accordingly. Use your position calculator to calculate the percentage of your portfolio size you are willing to risk on that trade, just in case the market does not move in our direction. So I wish us all the best of luck on the USDJPY. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before moving to the final asset on our watch list for today. Stay tuned in. Hey, hello Rex. Good morning to you. I'm very glad to hear from you. It's been a long time. Trust you're doing very well. And how is business there? Glad to hear from you, actually. All right. So, in the absence of no questions, I want to assume that we are all on the same page, right? We've mapped out the structures accordingly. Let's see how the market plays out. And of course, we are always on standby to capitalize and respond according to what the market sentiment brings. And thanks to this simple technical structure, we have identified here on the 15 minutes time frame. So once again, I wish us all the best of luck. So moving on to the final asset on our watch list. So the final asset on our watch list is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And of course, what an interesting situation we have here on the gold commodity. I had a couple of losses on Wednesday before I left the market, and yesterday I did not trade at all in this market. But on overall view, we are very positive on this asset. Remember, we bought right at the beginning of the week, though we were not able to maximize that upward trajectory as we saw price hit another record high at the $3,500 level before crashing back into where price action started this week. And before we continue, congratulations to everyone who has been part of this profitable journey. So what were we looking at the beginning of the week? Of course, we had our key level had a 3,320, as you can see here, and you know how we use our key levels. As long as price remains above them, we maintain bullish bias, looking out for patterns and structures that support buying idea. And when we saw the breakout of this trend line, for those of you who saw my weekend video on the XAUUSD, I said I will be buying as soon as the market opens with the breakout we saw here, and especially as price remains above this ascending trend line. And that was exactly what happened. We bought right from the get-go, and during the Forex Morning Mastery on Monday, we had another opportunity to buy here. I think we mentioned this level during the Forex Morning Mastery on Monday. We said we will buy here, and we bought at 3,385. Unfortunately, I had my TP around the 3,405. I never for once expected that price will go to that all-time high, but thank goodness we were able to make some profit off the market, and of course close the week on a positive note. And since price tested that all-time record on Tuesday, we saw price drop to the downside, and this came in with alongside positive data from the US economy, which resulted in a stronger US dollar. And this dollar at this moment still remains firm on the back of better than expected US macroeconomic data, including the 9.2% surge in durable goods order we saw yesterday. We can see what a phenomenal move that was. I had way above the expectation of 2%, and of course way above the 0.9% we saw in the previous month. And this of course had limited the upward trajectory in gold prices. Then to further support the US dollar is the equity market. There's this strong optimism in the equity market. As you can see, hopes of de-escalation in the US-China trade war is boosting risk appetite at the moment, making equities more attractive. And of course, you know, when the equity is growing, investors will pull their funds from non-yielding assets like the gold commodity, taking profit off the chart, and this has resulted in this massive move we saw to the downside. But at this juncture, it appears that this bearish move we see here is lacking a follow-through. Even though gold is looking like the asset to buy at this juncture, the market remains hesitant to place aggressive long trades due to the mixed sentiment in the market. And of course, this has resulted in a situation where price is not far away from that our key level at the 3,320 area. As you can see, in the last 48 to 60 hours, price has been oscillating around that key level at the 3,320, further emphasizing how important this structure is. And thank goodness I was able to identify that level as our yardstick for this week's trading session. Now, how do we intend to trade the gold commodity today? Are there any chances amidst the strong US dollar that the gold could gain some traction? Well, if we look at the Russian-Ukraine situation, we saw a deadly missile strike on Kyiv last night or yesterday, which of course cut short the president of Ukraine's visit to South Africa. He had to go back home, and this keeps geopolitical risk premium elevated, and of course supporting demand for safe haven assets like gold. And if we go ahead to follow the recent tariff confusion, which fuels uncertainty, you know, there were hopes of easing trade tension, where the US president says that negotiation is ongoing, but China's foreign minister yesterday denied any current negotiation with the US, reviving uncertainty and may likely offer support to the gold commodity. Now, besides that, comment from Fed officials suggest a rate cut as early as June is on the table, and the market is pricing in up to 3 cuts by year end. A major factor that could further support the price of gold going forward. So what are the chances for us? What are the chances that both buyers and sellers have for today? So for me, I'm going to be keeping a cautious stance, keeping my options as open as possible. I want to see what chances both buyers and sellers have. So as long as gold trades below the 3,320, I would like to favor the downside, especially if the US dollar strength and equity optimism continues. However, if price can climb above the 3,320, I will be looking for buying ideas at confirmations above that structure. So we want to be maybe watch the upcoming data like the Michigan consumer sentiment coming in later today. That's about 2 p.m. UTC. That's about 3 p.m. West African time. And any headlines on the US-China trade tension can also spark some reaction in this market. So they will set the tone for the gold commodities next direction. So to help navigate this market, I have a simple trading setup on the 15 minutes time frame. For those of you who are following me on both my Trading View and Telegram platform, you must have seen this. So I shared this morning before this live session, and this was what I saw here. And all I did was to take into account how the Asian market had reacted to this to the gold price. Remember, the Asian market the majority buyers of gold commodity, and of course I see from here that they are selling the gold, and this has resulted in this beautiful descending trend line you are seeing here. Now for me, and of course you know how we use our trend lines, as long as price remains below the descending trend line, we want to maintain a bearish bias. And there is something interesting about this descending trend line which makes it an area of focus for me. The fact that it also shares a confluence with that key level at the 3,320 makes this setup much interesting for me. So what I will be looking out for to buy at this juncture is for price to break out both the trend line and that key level at the 3,320, find a little bit of buying pressure around that area, then I will be jumping into a buy. So that is the only condition that will make me buy at this point in time. So let's see what happens around this particular area. And to further support the US dollar, and considering the the current strength in the US dollar, and of course the surge in the equity market, the past looks a little bit to the downside. Now, I will need some confirmation to happen before I jump into a sell right now. As you can see, since price tested this support line at the 3,287 during the early hours of today, the market has been consolidating. And what does this tell us? It tells us that there is an indecision in the market. So major key players are stepping aside, waiting for waiting for confirmation around risk of catalyst, maybe further Ukraine escalation, poor US data, or Fed tone shifting more dovish to re-engage, maybe going long or going short. So we want to be very reactive, not predictive at this point in time. Let's see how price is going to react to this consolidation phase. So personally, let's place a sell stop order below the support line at that area, because the sentiment is favoring sellers, right? And I will place a sell stop order there and see how the market is going to play out. So I place a sell stop order below the 3,287, and of course let's see what happens at this point. Then secondly, I do want to capture a trend within that consolidation, as you will see here. So I will just lighten the thickness of this one. This is a secondary trend, and the thick one is the primary trend. So we have a secondary trend here, and the fact that price is still trading below after it broke down the trend line here during the Asian session is a good signal to join a downtrend. And of course, if we consider this bearish move, okay, let me show you. So we had a bearish impulsive move, we had a support line, and then we had a trend line. Look at what we have here, a bearish rectangle, a downtrend continuation pattern in the form of a descending triangle, where the breakdown of the support line will further confirm the trend in favor of the sellers. So I want to strongly think that the US dollar will gain more traction today, and if it does, the breakdown of the 3,287 is where we are looking at to sell. But if price breaks out of this trend line, I will need serious confirmation before I can jump an uptrend move, but pending the time that happens, I will be updating us accordingly on both my TradingView and Telegram platform. So this is my simple view into the XAUUSD for today. I hope I made myself very clear, and if I did, and if you have found this content helpful and useful in making your independent trading decisions, I will greatly appreciate your support by giving the video a thumbs up. This is the cheapest and only way you can actually support this community to grow. And thank you for those of you who had clicked on the like button. I really appreciate your support. Thank you very much from the bottom of from my heart. And for those who are yet to click, please do so. Let's help the algorithm push the video to a wider audience of traders who may find this content beneficial to them. And thank you very much as you do so. So with that said here, let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you soon. All right. So I see you, Anis Ahmed. Good morning to you. How are you doing today? Glad to have you around. How are you? Do you have any questions for me? Or do you want to ask any questions? Let's know in the comment section before we start rounding off. And have you clicked on the like button? Please do so. Support the community. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? And with that said, I think we have come to the end of today's Forex Morning Mastery. So it has been a great moment with you guys today. We were able to take on all of the assets we are monitoring this week. We have been monitoring 3 financial instruments, including the USOILSPOT, the USDJPY, and of course the XAUUSD, popularly known as the gold spot. Oh, thank you very much, Anis Ahmed. Thank you very much. I really appreciate your support. Thank you. So we were able to identify new trading setups to help us navigate the market today. We talked about the fundamental factors, and of course we interpreted those fundamental factors on the chart using technical details around the 15 minutes time frame. I hope you are able to mark them out accordingly as we have illustrated. If you have done so, well done. Kudos to you. All we need to do right now is exercise patience and allow the structures to mature. And for those of you who are joining us for the first time today, I hope you are able to gain 1 or 2 things from what we have discussed here today. If you did, you want to be part of our subsequent editions. The next one is coming in on Monday, 9:30 a.m. West African time, 8:30 a.m. UTC. And of course, we are going to be having a premium session, Forex Market Prep on Sunday, where you have the privilege of asking me to analyze from both fundamental and technical perspective of any asset you are planning to trade next week. So if you're willing to be part of that session, let's come together on Sunday in preparation for the new week. And if you are yet to click on the subscribe button, please do right away, as you do not want to miss out on the updates that is coming in later in the weekend. So I see you. Anis Ahmed is USDJPY going up from weekly support now. I did a detailed analysis on the USDJPY. I guess you missed that session on the USDJPY, but it's okay. You can still watch the replay of this live session immediately after it ends. So stay tuned in. As soon as the live stream ends, you can rewatch the live play as I explained in detail what we are looking at on the USDJPY. All right, Anis Ahmed, I hope I'm clear on that one. So it's on this note I would like to wish us all the best of luck. Oh yes, it did, but we later came back. It did, I understand. Sorry about that, and I later came back. But trust me, you will be able to watch the replay after the end of the live session. All right, thank you. Anis Ahmed. Okay, so I guess we are all on the same page, right? And I want to wish us all the best of luck today. Trade smart, trade consciously. Do have a wonderful evening and a beautiful weekend. See you on Sunday as we prepare for the upcoming week. Do have a wonderful evening, everyone. Bye.